Hey guys, Philip speaking here. So I'm back already, so to say. I launched my first video on YouTube yesterday after I have had quite some demand to start doing some videos as well. As you know, based on my introduction yesterday, I have started this YouTube adventure based on my Twitter account. So as you can also see on this slide, my Twitter is called Gunst Philip as of my name, and I have approximately 6,000 followers in there where I'm posting loads of threads regarding investing and the stock market. However, I would also like you to go in and subscribe and like these videos on YouTube if you like them. I posted a poll on my Twitter this morning to get your feedback on whether or not we should do these in Danish or in English. And I have made a decision. So it seems that approximately 10% of my followers um, would not see them if they were in Danish, while only approximately 2% wouldn't see them if they were in English. However, there is a preference for Danish. That being said, the reach is significantly higher with English, so we'll go down that path in my opinion, and then we may do some videos in Danish. Let's see how things unfold. So the focus of today is to give you an insight into what the perfect CEO of a listed company looks like. So basically what I've done is that I have selected 10 critical elements that you as an investor need to look for when you're sort of screening the management of a company, a listed company, before doing an investment. And I think some of these are resonating quite well with some of the things I also discussed in my video yesterday about how I'm investing generally, and management is a huge parameter in my DD engine. Um, However, on the other side, I think some of these elements won't be visible before investing, so you will likely experience these things over the course of a longer period of time. So that is sort of the introduction. Let's jump into it. What I've done is that I have, based on my sort of experience over the course of the last 5 or 6 years, I've met a number of CEOs. I've also talked with quite a few of them, been in communication with them, and I think the best one up until now is for sure Alan Carter, being the CEO of Cabral Gold with the ticker code CBR.V. So they are listed on the Canadian Stock Exchange. Alan is sort of taking, if not all 10, at least 9 of them. And then I think the last one he may not take is probably because he has been sort of hit by some things that have affected him, external factors, and I'll get back to that. So what I'll do is that I'll talk through these 10 parameters. I don't think it will take that long, 10 elements, and I think I'll maybe use some examples of why I believe Alan is actually ticking these boxes. So let's jump into it. So first of all, I think it's quite important to emphasize and also as an investor understand that the critical elements that you are assessing a CEO of the company you're investing in based on varies greatly depending on the type of investment you're making. So first of all, you can invest in private equity, venture capital, or listed companies, or at least that is how I see the world of investing. So private equity is typically capital funds that are buying greater stakes in quite proven companies. Venture capital is startup and scale up companies where you're taking a minor stake often, could also be a bigger stake. And then there are listed companies. And I think why it's interesting that there is a difference is because the listed companies have some elements that are more important to be aware of as an investor. And I think we'll deep dive a bit into that. So number one on the left hand side here, and definitely so first of all, the number system is not in a sequence of importance, not at all. I think you should more see it as maybe the left hand side is more of a communication and presentation attribute, while the right hand side is more of a mixed box, so to say. But the first one I put in there, and also the first one that comes to mind, is skin in the game. So from my perspective, skin in the game is absolutely crucial. And one thing you need to have in mind when talking about skin in the game, so basically skin in the game is of course putting the money where his or her mouth is. So basically investing in the company himself or herself. However, I think there is a bit of a tricky one here. So often companies, especially smaller companies that don't have that much cash, are paying their executives with equity in the company based on options, or so to say, or could also be shares by itself when they're joining the company. So you need to sort of be aware of that a CEO may have 5 or 10% of the capital in a company. That being said, it's not necessarily a good thing, because if they have just been given 5 or 10% and not been buying any shares in the open market themselves, then it's, or at least put their own money into it, it's not necessarily that big of a deal. So Alan, for instance, owns, I think it's the 2 or 3% of the shares in Cabral Gold. He has put in 1.7 million Canadian dollars of his own money. He's not earning that much. I think he has a salary of approximately 200,000 Canadian dollars a year. And one of the stories I love to tell about Alan and sort of his investing into Cabral is that he's living in an apartment he is renting. He had the opportunity to buy it for a greater security in Brazil. He didn't do that because he wanted to buy some shares in Cabral. So skin in the game is absolutely critical. I don't have a benchmark in terms of what is the percentage you need to own, because it depends greatly on the size of the company as well. But Alan is surely a great example of this. Then number 2, a strong experience with a proven track record. So basically, if they have done it before, they're likely to able to pull it off again. And I think that actually is quite spot on, because a proven track record shows that they have the experience. Experience is several things. It's not necessarily about seniority, but it's definitely about skills. And sort of if you're able to develop a company into something bigger and more successful in the past, I think you sort of know your game, and you know what are the aspects and elements you need to put in there in order to do it again. So I think strong experience is definitely something you'll have to look into, and I'm happy to use LinkedIn, for instance, to analyze and assess a candidate or a CEO based on his experience on LinkedIn. I've been doing that with Patriot One. I've also been doing it with several of these mining companies that I'm in. The third one, the fourth one, and the fifth one are sort of tied together to some extent. So 3 being the great storyteller and the salesman, and I think this is a bit of a pitfall as well, because you need to be a bit cautious regarding the salesman in this aspect, because there are several CEOs that are great sales guys, but they're not necessarily great executors. So even though you're able to build a compelling narrative, that doesn't necessarily mean that you're able to execute efficiently in the company. So you need to be a bit cautious about this one. That being said, a great storyteller is Alan for sure. We have seen him present and sort of participate in several Q&As and interviews with Crooks as well. Crooks is definitely a tricky guy, and he's asking all of the tough questions, and I think Alan has been doing great in answering these. However, I think also the great storyteller comes with being visionary and aspirational, as well as being energetic and passionate. So first of all, let's take visionary and aspirational. From my perspective, if that guy that is leading the company you're investing in is not as ambitious as you are, why should you be ambitious about it? So a good example is that Alan has been buying shares at 10 or 12, 15 cents per share in Cabral. He hasn't sold a single share, even though he doesn't necessarily have a huge economy himself. And he has just, he has kept his entire position. He has no intention of selling them. That is what he has been communicating to the market. And I think that is a great visionary and aspirational CEO, that he don't want to take profit home, even though it may, from a risk management perspective, not be that smart. I think it is a huge sign to the investor that they should rely on him, and he is definitely visionary also in terms of what he want to do with Kui Kui. They have 1 million proven resources. He think that the upside is between 10 and 20 million Oz of gold. So I think he's definitely aspirational as well. So a great guy, and he's also very much showing this in his interviews, where he tends to actually take the lead on his interviews and sort of put the story in the direction he wanted to. And then of course that also ties together with being energetic and passionate. So even though you as a person, as an investor, are not necessarily an expert on the area, a good example is mining. I'm no geology expert or geologist at all whatsoever. Whenever there comes holes back, drilling holes back, I'm not the best one at interpreting these holes. However, that person that sits at the end of the table, being the CEO of the company you're investing in, he should make you feel like an expert, in the sense that he should be able to actually tell you in a passionate, energetic way what is actually the foundation of the company that he is running. Moving to the right hand side, we have reliability and trustworthiness as number 6, and I think this is an extremely important one. However, reliability and trustworthiness may be difficult to assess upfront before investing in a company. So this is actually something you will see over the course of time when you're investing in a company, whether or not they're keeping their promises and being transparent in communication. So I think some of the worst investments I've been doing has been in companies where the CEO has been promising gold, been promising very, very big things and haven't been able to deliver on those promises. And actually also in companies where the communication hasn't been transparent. So a good example is Patriot One. We had Martin Cronin in the first years in the CMR solution, sort of building that up to become a game changer in security. However, he didn't manage to actually tell the investors over the course of 36 months, actually 3 years, he didn't manage to tell investors what was happening with CMR. And now they've just been sort of pulling everything under the blanket, and then now we don't really know what is happening with that. And I think this is actually the one that I was talking about regarding Alan, and potentially the one he has been failing a bit on. So, but I think it also comes down to external factors with Alan and Cabral Gold. So what has been the issue with Cabral is that the lab times, so basically the lead times for whenever they have been drilling a hole on Kui and been sending it to the lab, which is approximately, I think it's 1,000 kilometers away from the land package they own. It takes approximately, I think they have been telling that it's between 3 and 5 weeks previously before COVID. Now it's 6 to 8 weeks. And I think Alan was in the beginning of the drill program when it started in August. I think he was quite bad at actually communicating this in a transparent way to the investors. So building up a lot of expectations for the share price. And that also led to some very long lead times on the news flow, and Alan is not a guy that is communicating very much through Twitter, and he's not communicating through newsletters. So that means that the news flow has been between some of the drill results has been long. I've also said that to him, and I hope he will follow in 2021. But let's see. But I think as a person, he's definitely reliable and trustworthy. And I think that is also, I would put my life in his hands basically, and I've also put a lot of my money in his hands, and I think it will end out quite good. So we shouldn't be too worried about that. And as I also said, it's an external factor regarding the lab lead times. So again, sometimes it's difficult, but you just need to adhere and be able to adapt to that environment quite quickly, and also communicate it to your investors. And sort of communication to investors is coming down to number 7, and sort of the frequent communication. What I have put down here is that despite a low intensity news flow, the shareholders shouldn't be left in the dark. I've been in companies where we haven't heard anything for 6-12 months, and it's absolutely terrible. So what I mean by that is, of course, there are quarterly reports, financial reports, but that's not a news flow from my perspective. We need to know what is going on as an investor. And it's okay, in my opinion, it's okay if you don't have any news to actually publish. If there's nothing to announce, that's fine by me. You shouldn't put things out there just for the sake of it. But then please communicate through additional channels than your news flow. You have social media, you have newsletters, and I think if you're not interested in communicating with your shareholders, you're not a shareholder-friendly CEO. So whenever you're doing your upfront analysis and due diligence on a company, look through the frequency of the news releases in the company, and also have a look at their Twitter profile, their Facebook, as well as potential newsletters on their website to see are they communicating frequently with the shareholders, and also try and send them an email and see if they respond quite quickly. I can tell you that Alan, he is responding to emails within 24 hours. He's also using interviews, and he's using Q&As to sort of emphasize and sort of elaborate on news releases whenever they're coming out. And he's also now considering to do a newsletter or even utilize Twitter even more than they're already doing. So I think that is a critical one from my perspective, also in terms of news flow being a driver for the share price. Number 8 is, of course, the deep knowledge foundation. I think it sort of ties back to number 2, having the strong experience. You need to know as a CEO what is going on, and sort of knowing what they are talking about is critical, and it's not necessarily only for the sake of a company. We can all learn by heart. So if you want to learn a company and a case by heart, it's quite easy. But they need to know the industry. They need to know the facts around the case. And I think, again, a difficult one to really understand upfront when investing. But when you have seen a couple of when you've seen a couple of videos with the management and the CEO, it should be quite easy to see if they are confident in how they're communicating about both the industry and the company and the case in itself. And I think a good example here is Ron Little, the CEO of Wolfen Resources, who is extremely knowledgeable, and he is also extremely experienced, and he has been doing this with Orezone for the last 20 years, built a huge company, a huge mining company there, and a developing mining company. And he's so confident about himself and the project that he's not necessarily rushing out news from number 7. He's not necessarily communicating that much with the market, but he knows what he is having in his hand, and he is very confident and comfortable with that. And I think that is a great sign for a CEO, and also as an investor looking into a company and investing in a company, that the CEO knows what he's talking about and what he's doing. Number 9 is a bit of a more operational element here, and I think it's, again, a very difficult one to sort of assess as an investor. However, I think foresight and proactivity is sort of being able to look ahead and around the corner, to use that metaphor. And I think it's a huge attribute, and I think it's more of an operational one. But a good example in the stock market is that for small cap companies, you need capital quite frequently, and often you need to raise that capital in the market. And if you need to raise capital in the market, you need to do it on the most beneficial terms for the shareholders and as a company as well. So a good example is Wolfen Resources, that has been stagnating on the low volume around the 20 cents, 30 cents per share throughout the year. And Ron Little don't want to raise capital at these prices, because he knows that it would dilute the shareholders and himself quite a bit at these prices, and it would just not be beneficial. He knows that they are going to pull some great drilling results from Picket Mountain, and pull some news flow in the market throughout Q1 to 2021. And he want to raise capital afterwards, because the share price will likely be higher. So I think sort of being proactive and also utilizing your huge surges in the share price to raise capital, even though it as an investor is annoying as hell to experience a 50 or 100% increase in the share price and then a private placement, then I think in sort of foresight and proactivity, it is a good thing as a CEO to be able to see those things, and also securing capital, and that by capital also 12, 24, 36 months runway for the company by raising capital. Alan has been saying it also. He raised capital this summer at 12.5 cents a share. And what he has been communicating is, again, very transparent to the market, is what we want to do is that we want to raise capital in Q1 or Q2 2021, and we want to do it after we have put out some amazing drill results, been drilling some great holes on either Machichi, Tracaya, or some of the other targets they have in their drilling program. And I think that is just amazing, because first of all, I think it's going to happen. They will pull off some great drilling results on one hand, but also being transparent in terms of investors can sort of react and act on it. So if you don't want to be in a company that is raising capital because of the risk of either dilution or potentially a downwards trend in the share price, then you're able to sell before Q1 and Q2. I'm not going to do that because I know that you want institutional funds or some of the big guys, as Eric Sprott, in the capital structure of the company. And if we're getting a private placement around $1 Canadian or 1.5 Canadian dollar in Q1 or Q2 with Eric Sprott on board, I can tell you it will be a positive catalyst for the share price. So being able to be proactive and look into the future, being sort of 6-12 months ahead of time, that is a great attribute as a CEO of a listed company. We're coming to an end, and number 10 here is also something that is extremely important. I have a friend of mine with his dad being the former CEO of Pandora, the jewelry company in Denmark, and one of his greatest attributes as a CEO is that he's extremely good at picking the right people for the management. And I think in my perspective, being able to build a robust team with the right people is not an easy thing. Of course, it comes back to your experience, and if you know people from your past that you're able to put in the team, that is of course something that makes it a whole lot easier. However, you need to understand the dynamics in a team and what are the personalities and the skills you need to put in there to attain the best possible outcome. And in my perspective, Alan has been doing that with his team and sort of the geologists he has on board. I think it's probably more viable in Wolfen Resources or even maybe in Altamira Gold, where Mike Bennett has been putting Alan Carter on as the chairman of the board. So back to maybe some of the compromises you also need to do as a CEO in a listed company is that you may not have all of these 10 in your sort of backpack. You may not master all of these 10 traits as a competent CEO, but if you're not able to at least by yourself be successful in all of these 10, then number 10 here, by constructing a robust team and putting together a strong team, is something that can outweigh some of the other aspects, because then you can have people communicate for you, you can have people execute for you, you can have people tell the story. You know what I mean here. So I think number 10 is actually a quite undervalued aspect of being a good CEO, because if you're able to combine the best personalities and skills into a team, then you surely have a very strong dynamic sort of forced for success. So that was my 10 traits of a competent CEO in a listed company. I hope that you like it. Please, if you have any comments, put them in the commentary either here on YouTube or on my Twitter page. As you can see here, my Twitter is @gunstphilip. And also, please subscribe to my YouTube channel here, as well as like this video if you think that these are a great complement to my Twitter threads. So thank you. That was all from my side today. Have a great one, guys.